Vacations and stuffed animals. What a great combination. That's what we're going to talk about next with our aggressive growth stock strategist, Brian Bolan, who has some splaining to do.
Yeah, I never think about the combinations of stocks until I'm right here and hearing you say what they are. And
Sure.
it doesn't really work out, as there's some sort of theme here other than they're both the Zacks Rank #1 stocks.
Well, you may want to take your teddy bear on vacation.
There you go.
What
right.
the heck. But let's start with the vacation packaging company and marketing company, Diamond Resorts.
Right, so Diamond Resorts is a stock that just came on my radar pretty recently, and I think the idea here is that this is really a marketing company. So if you subscribe to this, you pay an upfront fee of $25,000. That's your initiation cost.
Okay.
And then $1,500 a month, and it's a point-based system, so you accumulate enough points that you're going to spend 1 week of the year, on vacation with basically at least a family of 4. If you do this, you're going to have access to basically 300 different places throughout the world, on their point system.
And the number of points dictates where you can go?
Basically, yes.
So, like, if you don't have enough, maybe just for Michigan?
Maybe, maybe Michigan's a high point value system if you're based in Florida. I don't know.
Could be.
Or, there's all sorts of angles to it.
Ohio, you just save 10 points. That gets you to Ohio.
Well, come on, Cleveland rocks, Terry, as I'm sure you know. But there's a recent beat here and a big guide higher, and that's basically what I look for inside of aggressive growth is those stocks that are, beating estimates and then guiding higher. So the guide higher basically means that as much as you thought next quarter was going to be good, it's going to be even better than expectations.
Okay.
So there's been growing revenues, and the thing about a business like this is that the visibility on revenues is very stable. When you have that subscription model, and it's a very high cost subscription model, people are going to let you know when they're coming off of it, so that you'll know what your revenue expectations are. So lately, I've been showing this chart a lot. It's the revenue, expected revenue, and the stock price. And as you can see here, there's been a few bumps up, over the past few months here. So in January, there was that big move higher, and what you have there is that end-of-year guidance moving the estimate up. Now here, we're not quite at that January level, but you can see in September and October, there's been 2 times here where analysts have moved revenue expectations higher. We see the stock launching higher here as a result of the most recent earnings beat. But you can tell the idea here is that the more revenue that comes in and the more guidance there is, we're going to be looking for that end-of-year guidance boost again for possibly another move higher in revenue. So we have the company obviously here is Zacks Rank #1. You can see from the chart here, stock has really lifted from a low recently of 20 to almost 26. But I still think that there's a lot of room left on this vacation play.
Okay. Then Build-A-Bear, BBW the ticker, is the stuffed animal purveyor, provider, seller, whatever you want to call it. They have these mall-based stores, right?
Right, and you go in there with your bachelor party or your bachelorette party or maybe your children. I don't know who goes there.
Or just yourself.
Or just yourself if you're a collector of teddy bears. You like to make your own teddy bear.
I've got one that I sleep with every night. But
good
it's
for you.
Another story.
It's a whole different Zacks Rank buy.
Yeah, right.
That's right. A Prozac thing, or maybe one of those sleeping pills.
I'm insecure.
You're right. Well, maybe.
And lonely.
It's just at night.
Anyway.
Well, anyway, so that you build your own bear there, and obviously, this is a play that has come on my screen because of the recent earnings beat. It basically tripled estimates, so that's why we have that 200% earnings beat. If you're looking for 5 cents and you come up with 15, something is going good right here. The thing that I like about this play right now is that it is it's a retailer. With oil prices moving a lot lower, the retail stocks seem to get a big benefit, in a two-pronged fashion here. You have the consumer keeping more of its disposable income because they don't have to pay it in higher gas prices. But also there's that double whammy there that the transportation costs for the raw materials for a Build-A-Bear are going to move lower. So when you factor those two things in, you have a potential for higher sales, lower expenses. It's going to give you better earnings. So obviously right here we have a earnings Zacks Rank of #1 because because earnings estimates are moving higher.
So did this just come on your radar? Because I know this company came out strong when it came out of the gate, and then kind of took a dive for a while.
Right. I think there's been a long, protracted period of this stock, pretty much underperforming with the most recent beat, and that's what put it on the radar. So just only recently did it come back on. I know that it was on there before, and I think I've even talked about this one before with you guys, here on the video.
Yeah, it's been a while.
But just recently, that strong report has put it back on track.
Okay, so do you own either of these two?
I do not.
All right, check out other stock picks and stock picking strategies on our website, Zacks.com. Link to them right off the homepage. Get on over if you're not there already. With Brian, I'm Terry Ruffolo.